Hello again, everybody. Thanks for joining us on this short video. Today's video title is entitled, Are You Trading with Stops That Are Too Tight? And as everybody knows, these markets, whether it's the Russell 2000, which we have up here, or whether it's crude oil, or it could be natural gas, it could be one of the currencies, they're very efficient at what they do, and that is that they're constantly trying to seek equilibrium, trying constantly to shake traders out of positions because that is the nature of the markets. They're not one directional, either up or down. Most of the time, 70% of the time, they're doing some backing and filling. And where a lot of traders get into trouble is they get caught between the trade-off of having a stop that's not too large so that when a trade doesn't work, you minimize the damage as far as the loss is concerned. But by the same token, you don't want to have it so tight that you're constantly getting stopped out of good trades only to see your trade turn around and continue on. And I'm talking about basically situations where you get stopped out maybe by one or two ticks, which is very frustrating, and then off it goes again. Let's take a look at what I'm talking about today in the Russell. Now, this is the pit open right here in the Russell contract today. Today is November 20th, 2015. When these markets opened, the advances were over the decliners overall in the market by 2,000. In other words, there were 2,000 more advancers than decliners at the open this morning. What we saw is if this is your first trade setup, and basically this is just taking automatically filtered trades. Some of you know what this is. This is called the accelerator. But what this is doing is if this was the first trade entry and you placed your stop right under here, it basically came down, and then as it's always taught in the markets, you re-enter the trade one more time. Now, a lot of traders will place their stop right here and then place their stop right here and place their stop right here, which is good if you're trying to minimize risk, but a lot of times you're going to get taken out of trades. And unless you're disciplined to come back in and take what's called that second bite out of the apple, a lot of times you can be just left standing there at the altar as this market moves up. Part of what you may want to consider is opening it up a little bit bigger. What do I mean by that? Instead of placing the stop right here, using this indicator, which provides very nice levels, place your stop just under here on a closed basis. So as we came down, whereas this trade would have gotten stopped out, this one stayed, and you're able to take the trade and able to take a very nice run up on this trade, resulting in about 50 ticks in the time span of about 10 minutes. Okay, let's watch again. Let's see what happened again as we further come down. Here's another trade set up here. A lot of traders will place their stop right up underneath here, which is okay, but if you're going to be disciplined and re-enter the trade again, but a lot of traders won't, and they'll miss that opportunity. So instead, take a little bit bigger stop, place it up under the next band level, and that kept you in the trade again nicely. Again, this repeated over here one more time. Got the trade entry. With a tight stop, you got stopped out. You had to come back in, and actually it tested it one more time. But if you were to drop your stop below the band level, it kept you in that trade as well. So here's three circumstances where we saw, here's number one, this one held, here's number two, and here's number three. All three of these instances turned out to be very profitable trades. In fact, this one continued to move on and make a very large profit. But getting too stingy on your stops within one or two ticks of a support and resistance, those markets are generally going to try to test those and hunt those down. Now, if you have a statistical analysis tool that enables you to basically analyze these trades to determine what the best initial stops and scalp targets are, then that's what you should be looking to do. One of the tools that that's available here is called the statistical analysis tool, the stats analysis tool, and it will actually look at every one of these trade setups, over thousands of them basically, if you're looking at a long-term run here, and in essence tell you the best stop to be using. Short of that though, if you're just eyeballing the chart, then really applying a little common sense and applying, for example, a rule that you're going to give it an extra bandwidth, as was the case here, is going to save you on a lot of trades. Let's move on just a little bit further. You'll see that after this trade, the Russell went up and did make a new high, and let's just talk about what happened here. You can see when it came down initially, it provided a nice trade bounce here. Watch what the market did. It came down just to test this level by what? One tick, maybe two max, spun and turned and went up. Fortunately, this indicator signaled a long trade here, but for you traders, if you don't have access to an indicator like this or are not familiar with what's called taking the second bite out of the apple, that perseverance that you need to be a successful trader, chances are good you would have gotten stopped out and taken out. However, if this was your trade entry here, by placing your stop a little bit deeper underneath here, again, you saved yourself a nice trade. So here's 4 examples, 4 trade setups, every one of them basically the same, using a little bit bigger stop. It kept you in all of these trades and kept you into some nice profits. Now, I hope this was helpful. I hope you come away with at least an idea that perhaps maybe if you're struggling in your trading, you're finding yourself getting stopped out only to see the markets continue on in the direction that you thought. Give some serious consideration to broadening that stop by a little bit. We're not talking about a big amount. In this case, we're building it by about 6 ticks, but those 6 ticks can make a big difference in your trading. Thanks again, everybody. Thanks for watching. Take care now. Bye-bye.